Now let's move our focus and take a look at the latest financial news driving the Nigerian fixed income space. Now for that, I am joined by Ramat Babah, a currency trader at UBA. Ramat, it's great to have you on the show. Now, of course, there was a WDAS auction today, so start by giving us some insight into that auction.
Today, at the WDAS auction, the CBN sold a total of 207.66 million at a stop rate of 155.74. At the auction of Monday, the CBN also sold 300 million at 155.74. However, last week, the CBN sold a total of 600 million at a stop rate of 155.75.
Now, of course, there's 261 billion in OMO maturities expected tomorrow. So it is expected that CBN will continue to mop up the liquidity with an OMO auction tomorrow. So in the event that we have that, what is your outlook for rates?
Okay, that's at the OMO auction, you mean?
Yes.
With 261 billion coming into the system tomorrow, it is expected that the CBN may decide to mop up some liquidity. Today, the system opened with 14 billion credit in the system, and as a result of the WDA's debit of about 46 billion expected to leave the system today, we expect to open in a debit balance tomorrow. However, with as high as 261 billion coming in tomorrow, the CBN might decide to mop up this liquidity. Also, it is worthy to know that in the last few auctions, the CBN has inferred from the stop rate that they will not be willing to sell at anything higher than 12.5%. In fact, at the stop rate of Monday, the 178-day bill was sold at a stop rate of 12.35%. So from this, we expect that rates should actually hover within the lower region of 12% levels.
Now, the Naira gained further in the interbank forex market against the dollar yesterday as sales from oil majors continue to support the Naira. Now, how did the Naira fare today, and what's the outlook going forward?
First, let me take you back to the last 1 week. The NNPC sold 425 million and 220 million in the last week. And as a result, and also we also had sales from other oil companies totaling over 300 million. Before these oil inflows came in, the Naira was actually trading at levels of 155.95, and after the inflows, it dropped as low as 155.15. Today, the market traded within the region of 157.28 and 157.53, closing at 157.4555. Outlook is that really now rates have started to go up again because the demand is coming back into the market and the excess supply in the market is thinning out. So for the Naira, we expect that the rates will continue to go high going forward. Now,
outlook outflows from the bond sales of 110 billion Naira expected on Friday. So where do you see rates going as a result?
With 261 billion coming into the system tomorrow from OMO bills maturities, we actually expect rates to moderate, to go down again to levels of 10% and all that. However, with 110 billion going out on Friday, we expect rates to go back up to levels of about 11 and 12% levels, unless, of course, FAC comes in that day and dows the market again, taking rates back to about 10.25% levels.
But did the bearish trend that we're seeing in the bond market persist in trading today?
Yes, it did, because most counterparties continue to sell down positions, hoping to get better rates at the auction. Also, because of the state of emergency declared in three states of the Federation, we did not get as much inflows from the FDIs for the bond auction as we had expected. They made presence, however, but it wasn't as much as we expected, and the bearish market and the bearish trend in that market continued today.
Now, Ramat, April's inflation print out anytime now. So what's your outlook for inflation? And do you feel that the market has already priced in the numbers?
For inflation, in March, inflation actually fell to 8.6% year-on-year compared to February's figures of 9.5%. For April, we expect to see an upward trend in this figure, and unless the MPC actually comes out to make significant changes, we don't expect to see any changes in the market, because what will actually affect the market directly is going to be the MPC's decision. Hence, I don't think we should be seeing any changes in the market after the inflation figures are released.